Good afternoon, everybody. Thank you for joining us for the Tax Review Commission meeting today on June 16th. I'd like to call the meeting to order. And the first order of business is to take public testimony, if any.
We did not receive any public testimony prior, and if anybody wants to make public testimony, they can communicate and indicate that they want to do so by typing into the chat function, and then we will respond to you.
Hi, Murray. We just got started.
Hi, sorry about that.
Okay, well, seeing no public testimony, let's go on to approval of the minutes of May 25th. Everybody had an opportunity to read and see whether you have any corrections or amendments. Hearing none, can I have a motion to approve? Kate, can I have a second?
Second that.
Okay, Alton, all in favor say aye.
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 Any opposed? Motion carries. Okay, so I hope that Scott will be with us in a few minutes, but Seth, go ahead and get started with your presentation on tax credits.
It will be my pleasure. Okay, you guys can see everything okay? Yep.
Yes.
Okay, good. So the request today was just to talk a little bit more about, one, the amount of tax credits or the amount of money that is coming in the form of tax credits from the fiscal stimulus, mainly the ARPA Act, and then just dwell a little bit on Hawaii tax credits as a result. So I'm going to cover both of those. Please just feel free to interrupt me with any questions, and we can and I can answer questions at the very end too. This will generally be pretty quick. So for the fiscal stimulus, I just wanted to give you I think it was helpful to give a basic indication of where we are right now, right? And so if we went back and we looked at the Council on Revenues, which is the council that's the body that's responsible for forecasting our growth and from which the budget is actually forecasted on, in January of 2020, before the pandemic started, they were forecasting 4.1% growth in fiscal year 2020 and 4% growth in fiscal year 2021, right? So if we look at what we've actually received now, this is the forecast. I think we were down, or let me start over. For the fiscal year 2020, we were down 6.3%, right? And for 2021, it looks like this is the Council on Revenues forecast of 5%. It looks like we're going to be a little over this in terms of that. So that translates into $1.4 billion of budgetary shortfall up until this point. With the fiscal revenue between direct budgetary support between the CARES Act and the ARPA, that's $2.8 billion in revenue. So the amount of revenue, fiscal budgetary support that received by the federal government has surpassed and is nearly double that of the budgetary shortfall thus far, right? And that does not include a lot of other types of budgetary support. So like Department of Health, Department of Education, UH, they all receive tons and tons of money, right? So this is not all the funds. So this is just to say that even if you looked at ARPA, which is the most, the 1.6 billion, it has essentially no strings or very few strings attached to it. This makes up for the money that we've lost thus far. Just thought that. In terms of the money that's come in from the American Rescue Plan Act, I talked about the the child tax credits and the EITC exemptions, and Beth asked how much money is actually coming in. Well, here it is, right? So here's the total change in taxes. I included the stimulus checks, and this includes all three stimulus checks. So 1.6 Hawaii residents benefited from essentially $1.7 billion of stimulus checks. And the child tax credits will be equivalent to $480 million. And the increase in EITC should have an increase of $58 million. This is all information from the Institute on Taxation and Economic Policy. And then just to show you, this is the average amount for those benefiting from the change in the tax structure. This is the percent of no, this is a share of tax credits. So most of it is still coming from the stimulus checks. This is the amount of adults that they expect to help and the amount of children that are expected to help with the stimulus, with the child tax credits, and with the ITC. So that is where we are. Does anybody have any questions with that? Okay. So that's that. And then for the tax credits, now this will be pretty quick because it's pretty straightforward, but these are all of our tax credits, right? And so what we tend to do at our office is we lump the tax credits into tax credits that promote social welfare, tax credits that encourage certain industries and economic activities, and then tax credits to avoid double taxation. There's also some expired tax credits that we're still paying for. Believe it or not, we are still paying for the high technology business income tax credit, which was, I would say, infamous in the history of tax credits of Hawaii. In total, this is for tax year 2018. We offered $341 million worth of tax credits. The two largest ones are the film credit and the renewable energy tax credit, right? Here are these two. If we look over here, I'll just go through some of the other big ones. The other big ones are the refundable food tax, food and excise tax credit, the low income housing tax credit. This is for, we exempt, this is for, this is slightly different from the, I think it is slightly different. This is different from the low income household renters credit. So we offer a direct renters credit for low income people, and you get like a $50 and $100 tax credit that's sometimes refundable. This one's different. This one is has more to do with the actually the provision of low income housing. And then again, we have the EITC, which is a non-refundable tax credit that's about $15.5 million. If you look over here, we break it up into, like I said, tax credits that are basically supporting one industry or another, and that makes up over half the tax credits that we owe. And that is essentially due to the film credit and the renewable energy tax credit. Then we have about a quarter goes to promotion of social welfare, and another quarter goes to the provision eliminating double taxation. In terms of eliminating double taxation, we do something that most other states do, that if you pay taxes in another state, you're not going to be taxed on the same income in this state. And so that's what's going on. And the capital goods excise tax credit, this is to make up for if your investment in capital goods, and you pay GET on it, you get a refundable tax credit on that. So individuals get most of the amount of the tax credit, right? Now, individuals, you got to be careful about this because that includes a lot of S corps and partnerships as well, pass-through organizations that go where business income and business tax credit goes straight through to the individual income tax. payer. And then you have corporate taxation over here. But what you'll see is in terms of the proportion of the tax liability reduced by tax credits, financial corporations are number one. The reason this is not that there's a bunch of tax credits just targeted to financial corporations. What they tend to do is they buy existing tax credits and utilize these. And then the corporations, about half the corporate tax liability, a little bit more than half of the corporate tax liability is lowered for corporations. And then it goes down from there.
Could you go over that with a little bit more detail, or at least cover some of the things that I didn't quite get? You said something about tax credits that go to S corps. Is that categorized with the ones that go to individuals, or is that in a separate category?
Yeah, it would go to individuals, right? Because those are the people who are claiming the tax credit. So let's say I have a business and I built a bunch of solar, right? So I can get the renewable energy tax credit. If I have an S corp or a partnership, none of that is taxed at the entity level. They're all taxed at the individual level. So all those tax credits would flow through and the individual would be paying for that.
I see. Okay. And then when you were talking about large tax credits go to corporations, and often it's because they're buying up existing tax credits. And I am aware of the low income housing tax credit. What other tax credits are in that classification?
Financial corporations, I would have to go back, like LIHTC would be, or low income tax credit would be one of them. One of the holdovers would also be the qualified high income tax credit. My guess is a lot of the renewable energy tax credits are in here because, and maybe Murray can talk a little bit more about this, because the way you set up the deals, like financial entities and things, are sometimes putting money in to get tax credits out. So that's what happened. Now, the 97.2 seems really high, but if you look over here, it's pretty small, 35 million. One of the basic things is we just don't, financial corporations are taxed slightly differently or very differently than corporations, just because they have a different business model. So the reduction, you only need $35 million. What this says is the tax liability of financial corporations, which we don't have that many in Hawaii, is lower than the other corporations operating in Hawaii.
So I can, if you want, Seth, I can mention
Yep.
a little bit.
Yeah,
about
because I think it's really important, because the solar energy credits is kind of complicated when I look into it.
Yeah, so I'm not sure how much this has been done in Hawaii, and I've had a hard time finding out who is doing it and how much, but there's something that you may hear referred to as tax equity. And what that is sometimes the person that wants to put in solar doesn't have much of a tax appetite. I mean, they don't have a lot of income tax due that they need to offset with a credit. And so rather than take the haircut, what is it, 30%, Seth, on the refundable credit for the RETITC, the renewable energy credit, they will partner with another entity that has lots of taxable income that wants those tax credits. And there's different structures, and I won't bore everyone by going through them, but like a partnership flip is one example, where one partner owns the asset for the first couple of years, gets all the tax credits, gets some of the cash from the solar, and then flips it to the other person for the tail of the valuation. That allows one entity, even though they only invested part of the money, to gather all of the tax credits for their share of the cash flows from that project. And that is done, and it's basically a way to make use of the tax credits, even if the particular developer or homeowner in some cases can't make use of them themselves. I'm just not sure how much, in the interest of full disclosure, Ulupono has done one of those for a whole bunch of commercial solar projects. They bundled it up with Solar City back in the day, and we did one of those to help spur solar and get more solar out there. So it's definitely a legitimate way of doing it. I just don't know how much other people are doing that in Hawaii. It's hard for me to say. But Seth, I got a question for you. Where would new market tax credits fall in? Is that just federal, or is that doesn't affect the state, or is that in here somewhere?
What is a new market tax credit?
With a new market tax credit, I think it is federal now that I mentioned it, but essentially it's up to a 38% tax credit over, I think it's 6 years, where you invest in what basically they consider to be economically depressed areas, called a new market. And by making an investment in that area, you basically get a 38% tax credit. You get different pieces of it year by year over 6 years until it adds up to 38% of what you put into it. And it's just meant to spur development in areas that need economic development by offering a tax credit. But I think it is federal now that I mention it.
Yeah. The only thing I know of that we conform to is the opportunity zones, which allows you to take your capital gains, not pay your capital gains if you invest in one of these zones, in which
Yeah.
we conform to because that is part of the Internal Revenue Code.
Yeah.
However, that would not be considered a tax credit, right? That's
It's a deferral of recognizing the tax and a step up in basis as well, right?
Yeah, it's like a deduction, right? So for example, like here, the first $500,000 of capital gains from sale of your home is not taxable, but that's not a tax credit, right? That's more of a deduction. So we're only talking about explicit tax credits offered by the state of Hawaii, available to Hawaii taxpayers right now.
And Seth, we can do this by email or whatever later, but if you have the 2019 and 2020 tax credit amounts for the renewable energy tax credit, I'd love to get them.
We are putting together that right now. So just to let you, when we do reports, because especially high income earners don't really file their taxes until October, we are usually late. So the 2019 numbers will be coming out later this year.
Oh, wow. Okay.
Yeah. So all of our reports, the individual income, the business income, and the tax credit report are usually about 1.5 years old.
Okay.
2 years
Thank
old.
you.
Mm-hmm. So just again, if you can see in terms of, this is for individuals, what you see is there's like a lot of the tax credits in terms of reducing your tax liability. This makes sense because lower income people, it reduces the most. This is also generally because they have lower tax liabilities, but also we have a bunch of targeted credits for low income individuals, and this is how they reduce their tax credits. You see this is bumps up a little again. This is probably due to the renewable energy tax credit, but more so the paying the credit for taxes paid in other states, because high income individuals are more likely to have income from other states. And just as a reminder to all of you guys, we have these tax, and I can bring it, let's see if it'll bring it up through. I think I'm gonna have to switch windows, but we do have these data portals, and hold on, stop share. So let me go here. We do have these data portals, right? That like give you real-time input to all the tax credits. And you can find this on our webpage, and you can just play with them. So you can see the renewable energy tax credit, the film credit. This is, you can pick by tax year, number of different years, and you can download this data and play with it. You just go right here and you can download the tax thing. We also have this available for, let's see if we can. We have all these available for all these different incomes, just as a reminder. I think I shared this with you before, but just as a friendly reminder. And then the GET tax exemptions, I'm not going to go over them in this presentation because we went over them for the GET, but again, they're all here right now. So if you ever have questions or want the access to the data, they're all available on our website, and that you can interact with and download the data. So that's it for me. That was a quick presentation. And if you have any questions, just let me know.
And Seth, as usual, this PowerPoint will be shared afterwards with
Yes.
us? Okay,
Yes,
thank
correct.
you.
Mm-hmm.
So any questions or comments? Well, I have some. First of all, do you have any idea how our tax credit structure compares to other states? Do we have more? Do we have fewer? And I guess in terms of the number of credits and how much money is involved.
I do not. And again, that's a pretty broad question, right? Because there's the taxes that promote industries, certain industries, and then there's the taxes that promote social welfare. I don't have all that information, unfortunately.
I don't happen to remember whether past reports that have been done for tax review commissions have covered
Looked
that.
into that. Yeah,
There may
that's
be
something we could
something.
look into. In terms of stuff for like social welfare, I mean, I would even think your parent organization, I always get them. There's so many. The institute, the
ITEP. I can't
yeah,
remember what it
ITEP, yeah,
stands for
yeah,
either.
yeah. They have a lot of good information. They comparing at least EITC and socially target, or like looking at the regressivity of things. So that's pretty easy to get at. If you wanted more targeted tax credits, that's something we could definitely research if you guys are interested in.
Okay, well,
And also, and then of course the industry ones, I don't have the information. I do know that a lot of states have things about the film, like a film credit, but they usually put on have a little bit more restrictions than what we do.
Seth,
other questions?
yeah, the presentations that you've given in the past where you showed how much the different income groups pay in Hawaii and state taxes and such, was all that information net of all these tax credits, or were the tax credits not figured into that analysis?
Some of them were and some of them were not, right? So when we're looking at the individual, just the individual income, we usually had a line for with credits and without credits. In terms of the general distribution that I looked at tax burdens, the EITC was involved and the lower income tax burdens were involved, but I did not include things like the film tax credit or the renewable energy tax credit, because that's more like, we only include the ones that are
That doesn't
targeted.
affect the entire income group. It's kind of a, this guy got it,
Exactly.
this
Yep.
person didn't. Okay. But
Exactly.
the stuff that affects groups broadly was figured into that.
Correct. Yes.
Okay, great. Thank you.
Mm-hmm.
Other questions? I have a couple more. One of them, looking at past reports, I know that there has been discussion about the lack of transparency and whether there is a level playing field for the tax credits that go to promote industry. And so I'm wondering, what are the reporting requirements for these industries to demonstrate that they are providing a public good, since they're getting public money? And what, and I guess the second part is, can we promote greater transparency, since, you know, I know that we typically can't get information about who gets these benefits, but is maybe we should. Maybe that needs to be changed, because people who are getting these benefits, you know, that might be appropriate. But anyway, those are my questions, and I'm wondering what you can provide on that.
Yeah, so it depends on each tax credit. The film credit, because it goes through the film office at Deep Ed, they do provide certain information and regarding the production. And that is, some of it is released and some of it is not. So, and then the renewable energy tax credit, not a lot of information is available. Most of the other credits, nothing is available. This for the credits that promote social welfare and things, none is available. That's a suggestion that you can make. Like some states, I forget what it was, like if it was Iowa or a couple of states, that anytime any company receives a tax credit, it's just, they changed the law. So they said, you will be put on a government website so everybody can see. So that is something you can do. But according to our fiduciary responsibility, we take taxpayer confidentiality incredibly seriously here at the department. And so without like a passage of legislation, we don't provide anything, right? However, if you guys wanted to suggest that legislation should pass, that anybody who receives money from all the people who receive money for the film tax credit or the renewable energy tax credit, or there's a couple smaller ones, right? You could suggest that, and then we would go through the ropes and create a system where we do release that information.
So you're telling me that DBED collects some information about the film industry, much of which, or maybe most of which, is not available to the public. But for all of these other tax credits, there are no standards or requirements.
There's reporting requirements to us, but we do not share them with the public.
Can you say in general what kinds of reporting requirements those are?
They differ for each one. So for here, let me just show you what, like, I can just show you the different information that we have. So let me show you, share screen. So let's say tax. So yeah, you can like look at the instructions that we offer for the individual tax credits, right? So this is for the solar, and anything that's on a form is what we really, it's the only thing that we really, the information that we receive. So we would receive their name and where it is and just different information about that, but we don't receive like extensive reporting requirements. And again, some of the ones like the ag tax credits, they go through the Department of Agriculture, so there's some reporting requirements there. But again, a lot of them, the reporting requirements are included in the legislation often, and that's what we use.
Okay.
Yeah. I don't know if that was very helpful, but.
Well, it's yes, actually knowing where the requirements are in the forms, but not having more information about what that is. I'm just sort of wondering whether we might find it reasonable to have at least a summary of some of the benefits of providing tax credits.
Yeah, and what you can do is the tax credits, you know, we do have the tax credit report, right, that we put out every year. So if you want, and that's available on our website. So all the information that we have that is not considered taxpayer confidential, we generally put it out there, aggregate and put it out there. So you'll have a general idea of the type of information that we can share. And again, that's all contingent on legislation. And if you wanted higher levels of transparency and the TRC wanted higher levels of transparency, that is something that you guys could suggest, and then we would comply with that, right?
Okay, thank you.
Mhm.
Other questions or comments?
Seth, I have a couple. The first of which is regarding tax credits and the administration of those credits. Is there any data? I know that on the portals there are the number of claims for each of these credits, but do you have information on the number of successful claims and which claims for credits are successful, which ones are denied, which ones, if they're claimed by taxpayers, are challenged by the department down the line, and which ones are being wrongfully claimed? Is there any information on that?
Yeah, so in our reports, we only provide what's in the system. So if something's being audited, it wouldn't be included, or in something's audited in the future, we wouldn't be included. We do not provide information about the success of our audits or anything like that. And when you say the success of a tax credit, I'm assuming you just mean they get their money, right? Because there's a
Right.
whole nother side of this to say, like, is the tax credit succeeding in its original intent, which is a much harder question to answer.
Right. I guess in terms of the taxpayer successfully claiming the credit, and not whether it carries out its purpose, but whether or not, they're able to actually do that.
Yeah, we don't provide information to the public about the audit and like the audit rate for different tax credits.
Okay.
But
All right,
Seth,
sure.
to add on to Winston's question, if I might real quick, when you say on that report, there was 10,000 claims, does that mean there was 10,000, to Winston's question, were those 10,000 credits that were recognized, or just 10,000 people that tried to get them and maybe only some of them did?
So the 10,000 one, the only one you would actually see for 10,000 probably are like the tax exemptions, or are you looking at tax credits?
Well, just that list, the report that you had up, it had the different tax credit types, and you had.
Yeah, that's the tax exemption. So that would be for every single form that's filed. Right. So with a GET, you got to be careful because people file a GET form every, wait, let me look, let's pull it up so I'm answering the question all right. So I'm going to share my screen again. So we're looking at, no. Is this the one we were looking at?
I was referring to the tax credits, actually.
The tax credits? Okay.
So like the GET tax credit that low-income households get, there are tens of thousands of those, aren't there?
Tax credits.
So Seth, when, like, for example, the renewable energy technologies income tax credit says 42,106. Does that mean 42,106 people got the credit approved, or they just applied for it and some got it, some didn't?
No, that's.
I would think it would be ones that actually got it, because.
Yeah, it's be ones who actually got it. Yeah.
Sorry, Winston, I didn't mean to jump in on your question, but.
Oh, no. I think you clarified that. Yeah.
Yeah.
But if those are the ones that were actually claimed, then I guess my question is going to which of these claims are being, efficiently administered, or which ones are being written clearly so that people, when they're trying to apply for them, are claiming them when they're entitled to them. And, I think that's an important part for tax credits.
Yeah. No, we generally, if there's a claim and the form is filled out correctly and they provide the information, we give them the tax credit, right?
Right. Okay.
So like, let's say this is for like this, let's just do it by year, right? So yeah, the refundable food and excise tax credit, a lot of low income people take it and they're entitled to take it, right? So that makes sense. Earned income tax credit, 57,000 people claim it in a given year. So that makes sense, right?
Boy, some of these numbers are depressing, Seth. The cesspool upgrade one, 41 people. We've got 88,000 cesspools in Hawaii and only 41 got tax credits for converting them. That's pretty sad.
Yeah, so there's a bunch, just to give you, there's a bunch of like, you know, a lot of, and this is less technical information and more, this is my experience working with the legislature. There's a lot of tax credits that are like favored because they are, you know, priorities to the state, but sometimes you can offer tax credit, but if it's like a hurdle or there's something that's just not happening, the uptick will be low, right? So I think the cesspool is a great one. I think in my time, and I haven't been here that long, 4 years, they've like tried to re-up and redo the cesspool tax credit, but the uptake is just really low, right? So the amount of money that people could, some of these have caps on the amount of credits that can be claimed, but generally down here, they're never even close to the amount of the tax credit cap, just because they're hard to take advantage of or the requirements are high. I haven't looked really into any individual, but there's, each one of these has their own story for sure.
Yeah.
Yeah, because the other point is it has to be refundable. I mean, if it's not refundable and you don't have tax liability, it doesn't mean anything to you.
Correct.
And for cesspools, I just happen to know the problem is the cost of conversion is much in excess of the tax credit, and people don't feel like they can afford it, so they just don't do it.
Okay, any other questions? Okay, hearing none. Thank you, Seth. The next part of our agenda is to revisit the projects that we talked about earlier and figure out which of these truly are our high priority that we can that we can address in the next several months so that we can have a report in a timely way. And I also wanted to ask Seth to give us an update on how we might be able to spend some of the money that the legislature appropriated for our use, to have somebody who can help us get some of this work done. So Seth, why don't we start with that?
And your question is, how can we spend the money? Or
well, I guess what I am going to propose, okay, is to take a look at the list that we've already identified, see which of those still resonate with us and feel like they are high priorities. I would like to have every commissioner accept at least one of these issues as the manager to make sure that it gets done. And if that's the case, then it probably will require some staff time to do some of the legwork. I know that your staff time is already spoken for, and so since we do have some funding, I was hoping that we could use that to hire somebody as a consultant who would be able to do the background work as each of these issues is addressed.
that's totally doable. So like, of course, there's all these kind of procurement rules and things that I would have to go back and double check to make your life easier, but we can definitely hire consultants and have people, you know, researchers that support you guys and help you answer questions that you are looking to answer.
And that can be done in a short time period so that they actually will be able to start working with us soon.
Yes, yes. Again, depending on the size of the contract, you enter into different procurement rules, right? So whether you have to put out and I'd have to go back and check whether are the thresholds and how much each, how long you have to put out a request for proposal and things like that. I can do that for you. Cheaper is generally faster. I think I think the threshold is $5,000 or $10,000, but I can look into that for you. And then I can look at to see how long it would take for the to actually do the procurement. I can work with our ASO, which is Administrative Services Unit, to figure that out.
Okay, thank you. And Murray, I know that you wanted to work with McKenna. Are you able to do that?
Yeah, so I wasn't able to get an appointment with her up until now, but I've got one scheduled for next week when we'll kind of scope out those items that we talked about related to that break-even point as to how much the state could spend and still make the bottom 2 or the bottom 3 quintiles the same or better off, rather than feel the need to make all quintiles better off, including the wealthy, which is one of our topics, as well as the distributional effects on neighbor islands and so forth. So I'm having that conversation with her next week. But what you just asked, Beth, for Seth to get back to us on in terms of procurement, I'm assuming would apply to Dr. Kaufman as well, because if she says, yep, I can do it, and it will take me this long and this much money, do I have, I would need to know, Seth, do we have to go through a procurement to do a follow-on study, or because she did the original study, can we just do it with her directly? I don't know how the procurement works for that type of thing. So
since we didn't commission the original study, this would be this would be slightly different from our perspective, right?
Okay.
Yeah.
So yeah, we'll need to figure out the timelines on that, because I'm certain that work would be above $10,000. So if that's the threshold's not going to help us very much, because we need to go fast, and we don't have a lot of time. So yeah, whatever you can find out on, what it would require to work with Dr. Kaufman if she's able to do the work that we're interested in. And I know that this commission hasn't yet fully decided to push the button on that, so to speak. I get that, but if she can do the work and we want her to do the work, how do we then handle that in terms of procurement? That's what I don't know much about.
What I'll do is I will check with our ASO and make sure we're doing everything correctly. And then I will just send an email out to all of the commissioners, so you have that information to make further decisions upon.
Thank you. Then one follow-up question for me, Seth, which I think goes back to your question, Beth. In the past, for the past Tax Review Commission reports, the ones that we've reviewed, from past years, generally it's pretty obvious when a specific commission a specific study is launched by that commission. It's usually an appendix in a report or something like that. But in terms of the main text, not the appendices and the studies, but the main text of those reports where they're just writing down their recommendations for the legislature, has that historically been done by individual commissioners, or was that usually a consultant that wrote that kind of main report, the main part of the report in the past?
I believe it's a consultant. I would have to check again. I'm not 100% sure, but I believe it's a consultant. I've seen both. The last one, they wrote it, I think.
When I was talking to Director Choi, he was saying when he was the chair of the TRC, he did a lot of that work himself, which sort of surprised me. Yeah, I would hope that there is some assistance to get the thing finished too.
Yeah, well, and definitely the last commission, they had PFM, which was, they did the overall study. So it was a lot easier to just copy and paste and just adjust some words into the final report, right? So the PFM provided a pretty substantial report, which it's easier to do that when you have primary documents to draw from than to do something totally from scratch.
Yeah. So true.
Beth, does DOTAX have the capacity to help us with some of those things, like maybe do some of the drafting? Then at least there's some consistency in what's being drafted. There's an impression that DOTAX actually did all of that for their commission, but I guess I was wrong.
Yeah, generally we provide support, and I mean, if you need me to write 10 pages for you, I can get, as long as it's like reasonable, I can write 10 pages for you, most of the actual reports are 10 to 15 pages. They're not that long. They're like maybe 10 to 20 pages, right? In terms of the actual report. It's the annexes that take most of the time.
Okay.
But if you want to like if you want to hire somebody to write the report, we can definitely do that. I mean, that's why you have the money. So why not use the money, right?
Well, I think we have to look at what the best use is for the money. So
Mm-hmm.
it may not be in our best interest. Okay, I got it. Thanks.
So shall we take a look at the issues that we had previously identified as our priorities? And I had shared these with you in an earlier meeting. I can't remember quite when, but in no particular order of priority, we had identified the carbon tax and distribution of revenues, and Murray has kindly taken that upon himself. So that is already underway and clearly one of the things that we'll continue working on. We had also talked about reforming tax credits and exemptions. And I'm wondering whether that is an item that continues to be a high priority, and if so, whether one of you would like to take ownership.
Could I ask, because I know you did go through the list before, but could you run through the list and then?
Okay, yeah, that's fair. Sorry, I should have thought of that. So the tax reform and reform tax credits and exemptions was one of the items. And as those of you who have looked through past reports, you know that that has come up a number of times because of the issues of transparency and a level playing field. Another item is compliance and enforcement to collect what's already owed according to our existing tax system.
So sorry, so for that, I bought that up, so I'll take ownership of that. So I can work with the director on that.
Okay, excellent. The next one on the list is increasing visitor fees to offset costs to the environment and the local burden. And so we know that the legislature did update the transit accommodation laws to allow the counties to add a surcharge. Of course, we don't know whether the governor is going to sign it into law, but there's also a group, I think they were talking about the Green Passport Initiative, but I'm not absolutely certain that's what they're calling themselves. But that would be to try to figure out a way to assess a fee for all of our visitors, whether they stay in hotels or compliant accommodations. Another item was Simpson Bowles-like commission to look at our spending, not just at our revenues. Understanding, of course, that to the extent the legislature does pay attention to our report, they may have very little interest in expanding the purview of the Tax Review Commission to look at spending.
Yeah, I kind of brought that up and I'll volunteer for that.
Okay.
And since that's kind of narrow, I can also take on maybe something like spurring economic growth with targeted tax credit. So something like that.
Okay, so maybe you and Sale can split responsibilities for tax credits and exemptions. Is that what I'm hearing?
That's fine. We can figure it out.
Okay, good. Another item is tax rates and compliance for real property, wealth, and conveyance. So we did discuss the fact that the state doesn't have responsibility for county property taxes, but some past tax review commissions have addressed that. And we were interested in taking a look at the implications for taxing real property. It seems unlikely that we can meaningfully figure out a way to fairly tax wealth. I hope all of you saw the recent report that ProPublica reported about the ultra billionaires who are not paying their fair share of taxes. And I think that there is a lot more interest in that now. The legislature also recently passed an increase in the conveyance tax again. I don't think it's been signed into law. So that may not be important for us to address again this year. But in connection with this, I have an interest in taking a look at taxing long-term capital gains, which are taxed at a lower rate than ordinary income. And most of the benefit to the long-term capital gains goes to higher income people. So that would be something that I would have an interest in if we take that on. The next item is adjust standard deduction and personal exemptions to mirror federal rates and index them to inflation.
I think
And Murray,
I probably raised that, and that is something that's been brought up, I think, in at least the prior 2 reports, and it's a practical approach to more progressivity. So I'd be interested in taking that on.
So Kate, are you volunteering for that one?
Yeah.
Okay, great.
I've just pointed out, I think Seth may have said this before, but there might be some linkage between that work and some of the tax credit work, because I think some of the tax credits deal with the fact that the personal exemption, standard deduction are so low. And so there might be some interaction there. Didn't you say something to that effect, Seth, at some point?
That's correct. So there was an update. I'll have to take another look at the food and excise tax credit, but if there was a proposal to index that to inflation. I don't remember if it passed or not, but that's the only tax credit I know of that's indexed to inflation. But it generally means that as inflation continues, less and less people can claim those tax credits.
And the personal exemption and the standard deduction in the current brackets are not indexed to inflation.
Yeah.
And that's been the suggestion, like I said, at least the prior 2.
Yeah.
So I think that one is one that needs to be repeated.
Okay, thank you. The next item is equitable taxation on retirement income. We know that under our state tax law, we don't tax pensions, whether they are publicly or privately provided, but we do tax 401ks. So there seems to be a lot of inequity in our policy there. At the same time, we know that for the legislature, that's kind of the third rail, and I don't know how far we can go with that. Nonetheless, it is an issue of equity.
That was one I expressed interest in. I don't know that I want to take on both that and the carbon tax. I'm guessing one will keep me pretty busy. But yeah, I mean, taxing defined contribution but not defined benefit just seems grossly unfair. Whether or not we can get that changed, I don't know. I think part of my hope was that if you increase the standard deduction and personal exemption, that would partially offset any kind of new tax on people that are on the low income side of the defined benefit pension plans, and maybe they net out or something. But it seems like something that other tax commissions have brought up. It seems to be a basic equity issue, but I'm kind of ducking my head a little bit because I don't think I can do both carbon tax and that. But
yeah, I sympathize with you there. I do think that compared to some of the other ones, it may be more straightforward And it might be a matter of just bringing the data up to date.
Yeah, the one suggestion that I had previously, I think I mentioned it to Seth, was if we did decide to make a recommendation to increase the standard deduction and personal exemption, it would be interesting to see what the net effect would be on a low income, pensioner. They tax less if you raise those two, but then you get that defined benefit taxed. So what's the net of that? How much are they truly hurt if they're actually having the standard deduction and personal exemption increased? And that was kind of the dollar and cents questions that would have to be calculated to see what the net impact would be on folks. But again, I'm trying not to sign up for too much here.
Shall we set this aside for right now and see what we come up with in a few months, and whether this is something that sort of naturally fits in with the question about standard deductions, exemptions, or whether we have the bandwidth for it.
Yeah, I think that approach makes sense. And then I also think, I know in one of the earlier reports, not only did they talk about defined benefit, defined contribution, but they also talked about Social Security.
That's right.
And that one, talk about a third rail, I don't know. So
Yeah.
whether we only want to sort of approach part of that or not, I'm not sure. But I do think if we do decide we have the bandwidth for it, it might sort of fit in with the equity of the tax system in general and the deduction and exemptions.
Yeah. Okay, so increase visitor fees to offset costs to the environment and the local burden.
Almost the same thing as the green fee that you were discussing before, Beth. I think it's almost the same subject.
Yeah, right. I'm wondering whether we'd like to have the people who were promoting this talk to us at a meeting sometime soon, so that we can figure out whether this really is something that we can get farther into and make some recommendations. And I'd also like to know, I know that at least Senator Dela Cruz and probably some other legislators were interested in seeing what options there were for tourist taxes. So what do you think?
I think it's worth looking at it. I guess I'll just share a quick personal perspective. I care about personally, Karen, our organization cares about both carbon tax and green fee. The reason why I think the carbon tax is, if you had to choose, maybe we don't have to choose, but if you had to choose, the more important of the two is the carbon tax is certainly a lot broader. There's a lot more dollars involved, and there's more ability to maybe have some funding for the state if we, set that level right. Whereas the green fee is important, but it's a mechanism to fund conservation. And funding conservation is important, but if the green fee is done as proposed, keep in mind, it doesn't add anything to the general fund. It just adds to probably DLNR's, conservation budget. So that's good that it's ring fenced, but it's not something maybe the legislature will be interested at a broader basis because it doesn't add anything to the general fund. But I still support it. I'm just trying to tell you why I'm kind of more focused on the carbon tax versus the green fee.
Yeah, that makes sense.
The green fee also has a lot more legality issues.
Right, the constitutional issues. Yeah. So I guess the question is, do any of you want to hear what this group is proposing and the challenges and potential paths forward that they've seen? Anybody interested?
I'd be interested in hearing from them. I think it's a super ripe issue right now, particularly with the surge in tourism post-COVID, and folks are very sensitive to that, and tourism paying its own share and all of that. So I would at least be interested in hearing more about the issue.
Okay. And Murray and I also, So why don't we see if we can hear more about this and then decide what we want to do with it.
Yeah, so I don't recall if it was Conservation International or Nature Conservancy that was the lead kind of advocate. They both, I'm sure, won it, but it's probably a matter of asking one of them to come in, whoever the right person is to talk to us, maybe in a future meeting.
Yeah. Okay. Let's make that happen. And then the last thing is not really a separate initiative, but it's analyzing and balancing the recommendations. So turning it into a complete package that makes sense in terms of the pluses and minuses, or rather the revenues or deductions, and so that it's not just a laundry list of things that we're going to be recommending. And that will come after we decide all the things that we finally want to promote. So we didn't really lose anything from the list exactly, but I do appreciate those of you who stepped forward and identified your areas that you want to manage.
Can I just clarify the topic that I signed up for? It was the resources and modernization for, or just resources assigned to steel tax, basically, the enforcement of the existing law.
I'm sorry, can you repeat that, Sale?
It was the assigning resources and kind of more modernization for deal tax to enforce the existing tax code. So
Right.
that's what. So to that point, you know, between me and Alton, I think that's kind of where I was aimed at.
Okay, that sounds good.
Okay.
Okay, so what shall we do next? Our next meeting scheduled is July 21st. Murray, do you think that you will have anything to report at that time, or do you think you're going to?
Yeah, I really should. In fact, I had a question for Seth in terms of sunshine law stuff. So I'll meet with her next week, and I'm assuming that she'll be able to come back to us relatively quickly to say, yeah, I can do it. No, I can't. If I can, this is how much time and how much it would cost. I would expect to have that long before the next meeting. So the question for Seth is, if I get that information, say, you know, first week of July or something like that, do I have to wait until the 21st to share it with the commissioners, or can I send out an email to you that you share with the other commissioners? This is what she said, and this is what it would cost. We can start looking at that, or is it just safer to wait till the next meeting?
You can definitely send it to me and I can share it with the whole entire committee. You would not be able to decide on the allocation of funds.
Oh yeah, no proposals, no approvals, just yeah.
And just to let everybody know, I will not be here on the 20th of July. I'll be on vacation. So
I think it was the 21st.
or the 21st, yeah, the 21st of July.
I don't remember voting to approve Seth's vacation. Does anyone else?
Yeah, exactly. I don't have to be there. I will be here on the 7th and 28th if you guys want me to. Happy to support you any way you want.
I'm going to be unavailable the early part of July, so. What I have in mind for each of these discussions, and tell me whether you think this is reasonable, what I think we need is for the manager to come prepared at whatever meeting they're going to be talking, to have information about, to share with us all what is the issue, maybe what has already been discussed in the past by previous commissions, what, if any, information is included in the report that was done for the most recent commission a couple of years ago. What are the issues since then, if any? What recommendations would you make to the group? And then we can have a discussion and decide what the group wants to do with it. Does that sound good? And I'm thinking in that way, a consultant would be able to help do some of the research, like go back through the past reports, go back through the past consulting work that's been done, synthesize all of that, find out if there are any important updates that need to be included so that we can have the full array of information that we need to make our recommendations. Okay. Okay, so I also wanted, while we're at it, while we're talking about the next meeting, I wanted to talk about meeting at DOTAX. I know that Director Choi has invited us, and I think that it would be useful for us to actually see what goes on there. And I think particularly Scott, who's not here, it would be good to know whether he can come over since he has to come from Maui. And Seth, I am assuming that when we have the meetings, we either have them face to face or we have them by Zoom. We can't have all of us sitting in a room and include Scott by Zoom, or is that possible?
That's possible.
Oh, okay. Then maybe it's not quite such a critical question.
And then Seth, did we decide that, were you going to be able to get back to us via email before the next meeting on the whole procurement issues and how long it's going to take and all that stuff?
Yeah, I'll get it to you within a week's time. I'll send it to each one of you about how long it takes and what are the requirements.
Thank you.
Okay, so Seth, let's decide offline how we need to get somebody to come talk about the green fee issue.
Easy. Yep.
Okay. And then
Do you want that to be in the next meeting?
yeah, I think that we can
Okay.
probably do both. Does that seem reasonable to you, Murray?
Yeah, the folks that they're pushing for it, they're very anxious to talk to anyone that will listen to try to further their goals. So yeah, I'm sure they'd be anxious to do it.
Okay, great. And then who wants to be lined up to work next? We've got Sale and Alton working on compliance. We've got the Simpson Bowles issue. We've got standard deductions and exemptions, Kate.
So by next, do you mean at the August meeting, or are we still talking July?
I think that probably would be August.
Okay, do we have, I'm sorry, do we have a date in August?
I don't know, but I'm wondering whether we need to set 2 dates in August. And is that, are people going to be traveling? Is that going to be a conflict? Because in order to get through all of this stuff, we probably are going to have to.
I think I'd be ready to do sort of at least my thoughts on the exemption, the indexing for inflation piece. But I do leave the last week of August, and I'll be gone a fairly significant chunk of time. So if we could do it before then in August, that would be okay.
Okay.
Yeah, I hate to be the one to recommend this, but we might have to have more meetings than one a month. I just don't think we're going to get it done in time at the rate that we're going right now.
I think so too, honestly.
Yeah.
So if our next scheduled meeting is the 21st of July, the week before that would be the 14th.
Yes.
Okay. Could we meet the 14th in addition to the 21st, or should we change our meeting schedule a little bit more than that? Could we meet the 21st and 28th, or would you like the 14th and 21st?
I will not be here on the 14th. Again, that is not, you guys
Right.
can, but I'll be here on the 28th.
Okay, well, let me propose that we meet on the 21st and also set aside the following week, the 28th.
28th. I can do that.
Okay,
And I can take the 28th as, you know, at least part of the agenda, sort of what, you know, the summary that you discussed on managing the exemption, standard deduction, and rate indexing.
okay,
So this is July, right? July 28th? Yeah, I can't
Yes.
make July 28th.
I'm available.
I'll be there.
okay. I think we agreed that July 28th is going to work, and we will have Kate talk about that. The green fee, we'll try to do that on July 21st, as well as hear from Murray. And then when is our next meeting date after July? I've got the 18th of August. Do we want to meet maybe the 18th and then September 1st? Or maybe the 18th and 25th?
I don't have the 18th. I'm not sure why. I can do the 18th, but I cannot do the 25th.
Sorry, Kate, what did you say?
I can do the 18th, but not the 25th.
Okay,
So, and
how
I don't,
about,
you know, I don't know that all of us have to be at every single meeting. That's going to be.
well, that's true. I mean,
Yeah.
yeah, I mean, to the extent possible, it would be good to have everybody. How about the 11th? Anybody not available on the 11th?
I'm open on the 11th.
I have another commitment.
The 18th is fine, or the 25th or the 11th is fine with me.
I'm available the 11th or the 18th.
So sometime in
Okay.
August, I think I can do my portion of what I'm assigned to.
Okay, great. I think we heard more people available on the 11th as well as the 18th. So the compliance and enforcement, is that what we were talking about doing?
Sure, yep.
And that would be August. Did you say you're available on the 11th or just the 18th?
11th or the 18th, either one.
Okay, let's line that up for the 11th right now.
Okay.
Alton, do you want to talk about the Simpson Bowls thing on the 18th?
So I'd like to ask for a little more time, maybe the meeting after that.
Sure. Let me see what I can do with tax rates on wealth and property. Okay. Then Alton will have you on whatever next date.
Okay.
Can I make one recommendation? When I see people utilize TRC stuff, the more concrete the recommendation is, the more likely they are. It's usually when they're in an emergency and they need money or they don't need money and they just, the legislative aides go and like read through all the TRC things and then they throw these into like actual bills. So my recommendation when you guys are thinking about all this is make the most concrete recommendation as possible. So
Thank you.
yeah. So instead of
Yeah.
saying, oh, raise index rates to, well, index rates to inflation is fine, right? But like if you wanted to say index rates to inflation and increase the standard exemption by X amount, and we will save this amount of money or it will be neutral, they will lift that out much quicker than if you say, you guys should need to look at that, you know.
Yeah, and that is excellent advice. And I think that that's what we need to try to do, is be as explicit as possible about the amounts, dollars, the consequences of doing something. And hopefully the consultant that will be working with us will be able to help us look at the costs associated with, or the dollar values associated with each option.
Yeah, and we can do that. I mean, we have more information than the consultant. So in terms of like the cost estimates, my office is more than happy to support you guys.
Okay, that's great.
Mhm.
Does everybody feel pretty comfortable in how you would want to approach the subject that you're going to be managing?
You know,
Okay.
it sounds like if we, each of us can come up with kind of our thesis, if you will, for our subject area, and you have almost like bullet points of what we think should be done. And then Seth folks can calculate the impact and the dollars, and maybe the consultant is just the person that writes the actual narrative and puts it all together. So we come up with the ideas, Seth comes up with the numbers, the consultant makes it sound smart. If we can get the consultant in time.
Okay, so we have our marching orders and plenty of work to do. Winston, you're kind of the utility who we can drag into anything that has been unassigned so far. Okay.
Sure. I didn't see anybody taking up the tax credits and exemptions topic, or maybe I missed that, but it looks like that's open right now. So
Oh yeah, that's right. We just sort
So
of
I'd be
blew
willing
right
to take
past
that.
So
I'd be
yeah,
willing to take that on.
thank you. Put you on to tech and give you maybe until September to work on that.
I think that's sufficient. Yeah.
Okay, great. Okay, so our next meeting then will be July 21st. Seth could, or Rick or somebody on staff could see whether it's possible for us to meet at the Department of Taxation. conference room.
Great. On
Okay,
the
anything
July
else?
21st, yeah.
Yeah.
And then I'll ask Ted to be present with you guys, and just so you guys can have a representative from the Department
Yes,
of
thank you.
Taxation there.
Oh, and when we meet in person, is the meeting still going to be recorded and available online, or would any member of the public need to be there in person?
Well, I
days?
mean, the more I think about this, the big issue is the building has to be open to the public, so people coming into the TR, so the public can attend your meetings. I'll look into all the ins and outs of that, and I'll work with you, Beth and Alton, about all of that, and we'll work out the details.
Okay, so we may have to have a change of plan, but for right now, we'll see if we can get.
Yep.
If we
Mhm.
can get. Okay. Is there anything else that we need to cover in terms of our next meeting and work on these projects? If not, then I want to thank you all for your attention and your work on this. And it is 1:20. The meeting is adjourned.
Thank you very much.
Ron,
Thank you.
see ya.
Bye.
Bye.